I have with me Robert Waghorne. He is a Senior Vice President of European Markets Technology at Nasdaq OMX. Robert, thank you very much for joining us.
Thanks a lot. It's been a pleasure.
Robert, last month, Nasdaq OMX launched a new web-based trading application, Genium iNet Web Trade. Tell us about the application, what needed to be done at the data center level to ensure the delivery of this application.
Yeah, the Genium iNet trading application was a web-based terminal that's going to allow some new access into specifically our commodity markets in Europe. So it's a light deployment that's going to allow our members to actually push this to some of their end clients in a very quick manner. It's got a 2-layer authentication, meets our security standards, and has been, we're just starting the rollout, but so far it's been very successful. From the data center perspective, it's a relatively light deployment, using standard web services. So it was pretty quick on the data center side and extremely light on our customer side, where really it's served up from a browser.
What other web-based trading applications does Nasdaq provide? If you could give us like a brief overview, and what technological challenges do they pose on the data center level that are perhaps unique to web-based?
Yeah, so Nasdaq has a rich history of supporting web applications, including web trading applications. So in the U.S., we've got some Nasdaq Workstation technology that supports order entry and viewing of our market data in our U.S. markets, and we have a Nordic Workstation that supports our European customers. I think some of the challenges that are there are making sure that we provide the 100% uptime that's expected out of Nasdaq. So we build in our redundancy, making sure that they're running out of multiple data centers, and customers can connect into either of the data centers, and that's a real important factor on making sure that we establish continuity on our web-based trading. The other thing that is really critical is that we have a strong security standard that we have at Nasdaq OMX, and that we support a strong security on these web-based applications. So those are both kind of critical from both the user perspective and from the Nasdaq OMX perspective. Let's
shift gears a little bit. When we talk about networks, all major network vendors have recently announced products that flatten the data center network, as they put it. Companies like Cisco, Juniper, Brocade, they all have announced network fabric architectures. Do you agree that these, what are your thoughts on this idea of network fabric, and also will this data center network transformation what kind of effect is that going to have on the electronic trading?
Yeah, that's a good question. At Nasdaq OMX, we are at the forefront of research and development on high-speed trading. We've got the fastest trading system in the world. We publish our statistics on a weekly basis, and we are constantly working with our networking vendors on low latency and high reliability networks. Very recently, we rolled out a 10 gig network for our colocation customers last year. It's been extremely successful, and has really given us a measurable reduction of latency of about 25 microseconds on average between a 1 gig network, and has really proved valuable to our customers. So we're really excited about some of the new research and development that's coming out of the network providers, and we're going to be working with them to really develop the next level of services for our customers. So the latest generation has been very valuable, and we expect, I think, this new generation will continue through our research and development. Will provide some value as well.
Nasdaq has an extensive colocation business, as do lots of other major exchange companies. What kind of growth have you guys seen in this business so far, and what kind of growth are you anticipating for Nasdaq colocation business?
Yeah, Nasdaq OMX has been a pioneer in the colocation business with the exchange industry. We really started in 2006, and we've seen a tremendous growth, about 450% growth since the beginning to where we are right now, and we are continuing to be the leader in that space. We've got colocation space in the U.S. for our U.S.-based exchanges. We also have exchanges in Europe, and we are rapidly expanding our colocation business in Europe as well. So we're continuing to see growth, and the growth in the U.S. has been tremendous, and we're now just starting to see that same ramp up in Europe as competition is starting to increase in the European space. And we expect to see that, also start to move into Asia as well, as those exchanges start to consolidate and there's more competition in Asia.
And looking at overall market for exchange company-operated data centers, what kind of growth are you guys anticipating in the market as a whole over the next couple of years? Is there going to be very quick growth, slow growth? What kind of?
Well, I mean, clearly we're seeing, the events of the last month. There are some, large exchanges announcing some mergers. So I think, we'll continue to see that. But I think we'll continue to see, growth of exchange technology, and therefore, the exchanges will continue to need data center space. And I think, we're seeing it's a relatively mature market in the U.S., but there's continuing to be more exchanges and more competition in the U.S. And then we expect to see more of this move to Europe as that market, as I mentioned, is getting more competitive. I'd expect that we're going to see more technology and more data center usage there. And then as that competition again moves to Asia, I would expect we're going to see some more data center space and needs as the high-frequency trading and colocation business starts to grow in those regions to the extent that it's grown in the U.S.
Robert, thank you very much for your time.
Thanks a lot.